Hello everyone, welcome back to EduDose. So we have discussed the money and credit chapter in part 2, two parts, that is part 1 and part 2. In the part 1 we have discussed that what is money, what is credit, what are the uses of them, and in the part 2 we have learned what are cooperatives, what are the loan activities of bank. So now in this session, that is part 3 of that chapter, we are discussing sectors of credit. So let's start. So what are the sectors of credit? Sectors of credit, the first in India is formal credit, formal sector, and the second, that is what, informal sector. So there are two sectors in India that are present today. That is what, first is formal sector and the second is what, informal sector. In the formal sector consists of two things, that is what, banks and cooperatives. So the banks and cooperatives are owned by the government only. So you can say the formal sector of credit is governed by or is governed by government, or you can say the head of these two, or the head of formal sector is what, the government is the head of the formal sector. So now you can say in the informal sectors we can lend out the money, or we can take the money from the money lenders, from the traders, or from the employers, or we can take them from the relatives and friends of ours. So you can say in this thing, the lender or the person who is lending the money is not from the government. The government is not here. The government is not playing any role in the informal sector of credit. So as you have seen that the formal and informal sectors both are different from each other, that the formal sector consists of the government. The government is the head of the formal sector, you can say, because banks and cooperatives are also governed by the government. And in the informal sector, no role of government is there. There is just the role of lender and borrower, that the person who is borrowing and the person who is lending will be the only ones in this system. So let's understand the formal sector of credit in deep. So the formal sector of credit. In this formal sector of credit, the thing that is what, the Reserve Bank of India, the RBI, plays a major role, or you can say he is, or the thing is that RBI is the head of the organization or head of the bank. So RBI is what, Reserve Bank of India, that is what, the RBI is head of all banks present in India. So RBI supervises all the functioning of formal sources. You can say the formal sources are what, first is what we can say bank, and the second is what, cooperatives. Cooperatives are the, I'll give you a recap of the cooperatives that we have studied in the earlier sessions. The cooperatives are, you can say, a organization made by the government. So you can say here, I'll write it, that a organization made by government to provide help of loans to rural areas. So these are some help groups, or you can say some organizations made by the government to help the people living in the rural areas to have the loan. So I have told you that the formal sectors of credit includes, the formal sector of loan include the banks and cooperatives. I have just written it here that what are cooperatives and what are banks we have studied. Now let's get upon to the third point, that a reasonable rate of interest means the government is not paying some higher interest, not so much of higher interest so that the payee cannot pay the bank. Not such a higher amount is not reasonable. The rate of interest is just reasonable, means that the person who is paying the loan afterwards, he can pay the loan without any difficulty, without any suffering of the debt trap. He can easily pay. That type of rate is charged on that loan. So there are terms of credit, as I have told you earlier that there are 5 C's of credit, as we have discussed. The 5 C's of credit are what? Character, collateral, and this is what? Capacity, condition, and the last one is capital. So these are the 5 C's of credit, as we have understood in the previous sessions, that it is what? Character, collateral, capacity, condition, and the last, that is what? Capital. So these are the terms of credit that the loan, then that when the bank pays us loan, or the bank when lends us loan, these are the terms of credit that is what needed for the approval of the loan. So there are terms of credit that are the 5 C's, that are fair. Means fair, that the gender discrimination, the discrimination on the basis of religion, that if we are Muslim, we have the terms of credit change, or the if we are having a gender basis discrimination or caste basis, no discrimination on the basis of religion, caste, race will be there in the formal sector of credit. And the proper terms of credit and collateral are necessary for the loans. It means that the collateral that we are mortgaging, we should have a proper collateral. Means the land or the thing that we are collateralizing should be proper, have the proper set of papers and the set of rules, that guidelines, and the set of rules and guidelines that should be followed. The collateral should be proper, and the terms of credit also should be proper. That means your character should be good. The collateral that you are mortgaging should be also followed by the all and rules and regulations that are mentioned by the government. The capacity you should have, that you should pay the thing that you are taking now, and the condition of yours should be good, and the capital also you should have. So these are the some points that formal sectors of credit have. So let's move upon to the informal sector of credit in India. So these points that I have written here, it's very important. These are the notes you will get from the link in the description box. The link is given in the description box, and you should download these notes, as it is very important, so that you can learn these points and also revise these points at the time of your paper. So the role of RBI in formal sector of credit. That means what? The role of RBI is just one thing, that is what? Supervision. That means to see upon or to manage the banks, that are they functioning of banks is good, are the functioning of formal sectors is going good or not. That means the bank also supervises the banks, the RBI supervises the banks also, and the banks maintain a minimum cash. What minimum cash? 15%, as we have studied earlier. The 15% minimum cash balance out the banks when the depositors receive. So the RBI monitors the bank in actually maintaining the cash, as it means that RBI sees that whether the banks are maintaining the 15%, that is the minimum cash, are maintaining the minimum cash properly. That means what? That means they see upon, the RBI sees that the banks which are getting the loans or which are lending the loans are maintaining the 15% minimum cash as their deposits. So here the RBI also sees that the banks give loans not just to profit making business, but also to the traders and small scale producers or small scale cultivators. So here also bank sees that the RBI is not giving to the only the middle class or the rich persons who are living in this society. They should also give the loans to the small cultivators and to also the small farmers, small scale industrialists. They should also give, so that they can also prosperous their business. So here the fifth point is what? The banks have to submit information at the end, you can say, to the RBI on how much they are lending, to whom, and at what interest rate. So that means the at the end, you can say at the end of the month or at end of the year, the thing that they are doing, they have to submit a report or the information that whether they are lending and how much they are lending, to whom they are lending, and at what interest rate are they lending the loan, or they are lending the loan properly or not to the people of our country. So that's the role of RBI in the formal sector of credit. That is what supervision. It only supervises the banks that they are doing their things properly or not. So here comes the informal sector. So in the informal sector, no supervision body or no supervisionary body is there to supervise the work of the informal sectors. It includes the friends, relatives, parents and moneylenders as or the traders, as we have studied earlier, and it usually have a high rate of interest. This is the most important, you can say, market as very important point, because in the informal sector the main point is what, that they usually have a high interest rate because there is no supervisionary body. So the wish of the desire to the person that what may he wants, he can give the high interest. So the terms of credit can be unfair. That means there can be discrimination on the basis of caste, that you are a Dalit, you cannot be given the loan because you are untouchable, or to the race or to the caste, or to the discrimination can be on the basis of gender. At the rural areas you can see that women can be suppressed by the men for not giving the loans. So here you can see that some type of discrimination also in the terms of credit, and terms of credit also can be unfair, that you should have, you don't have to have a good character, you can be a don or what and you can have the loan. So these are some unfair means that are going on in the informal sector, and there are the proper terms and credit are absent, and collateral is also absent. Repeated borrowing can lend to debt trap, as we have seen in the Swapna case. As we have taken the two situations of credit, Swapna was kept into debt trap because of the informal sector of credit. So let's move upon that why the informal sector of credit have these cons because of the things. So this is a graph on the sources that the rural household take on the loans. That means what, from the government the rural households take 1% loan, from the cooperatives they take about 25%, from the other institutional agencies they take about 5%, from the commercial banks, that is, these are some, you can say, the formal sector of loan, or you can say credit. And here you can see the non and landlord, there is what, informal sector of credit or loan, you can say. Yeah. So now here you can see that from the government they are taking about 1%, from the cooperatives and banks the rural households are taking about 25%, from the commercial banks, that means from the authorized banks they are taking about 25%, from the other institutional agencies they are taking about 5%, and from the landlords they are taking 1% and much more. So you can see here that from the formal sector there is about 56% loan taking, and from the informal sector there is about 44%. If you sum up all these all the percent, if you sum up, they are 44% from the informal sector and 56% from the formal sector. So we can see here the rural households are taking 56% from formal sector of loan, and in the rural sector only the informal sector of credit is taking about 44%. So let's see upon the second graph, that is of the urban households. So in the urban households you can see that what percentage we are now taking of as formal and as informal. So we can see here that the blue color, that is what, let's mark it off with red color. This is what the blue color. So from the blue color we can see that it is the informal sector, and this is the informal sector and formal sector. We have understood that what is the formal and what is the informal. So here you can see that from the poor households we can see that 85% is from the informal sector, and from the households that have some asset or have some collaterals, they are taking 53% only from the informal sectors of credit. And the well-off households means that are somehow educated or somehow having some collateral or having collateral so that they can afford a loan from the formal sector, they are taking about 72%. And the rich households means the educated class, the rich class that have the money to have the collateral, to have the assets that can have and the capacity or the capital, they are about 90%. So we can see the poor persons are less from the formal sector, whereas we can see the rich person are higher in the formal sector. So why the poor is low, or why the poor is taking the loan from the informal sector? Let's see. So let's see how to reduce dependence on informal credit. So as we have seen that the cheap and affordable credit, that means that in the formal sector there should be somehow interest rate that much that when the payee or when the lender have to repay the loan, he should not be kept in the debt trap. So that much affordable credit should be, or the reasonable credit should be. Banks and cooperatives need to lend more, means the banks and cooperatives should help the needy people or should help in the rural areas also, so that they can also afford or they can also have the cheap credit or cheap loan. So this would lead to higher incomes, and many people could borrow cheaply from a variety of needs. Equal distribution of formal credit so that the poor can benefit from the cheaper loans. That means in the rural areas also, in the villages also, the banks should be there, banks, so that there should be an equal distribution of banks between the urban areas and the rural areas, so that there can be a formal, or you can say a form type of equal distribution between the poor and the rich who are having the benefits. So the most important and the main important thing of this chapter is what? Self-help groups. This is the very important topic, you can mark it as, because 5 markers come from it, and CBSE directly asks the things from the self-help group topic, so you should also learn that. So the self-help groups are mainly for the poor. That means these are mainly for the poor, to help the poor to from the informal credit, that because in the informal credit they have to pay a type of more interest rate. So higher interest rate, the self-help group save the poorer from the informal sectors of credit. So in this thing we can see that a self-help group is also a type of cooperatives. All cooperatives are also or same as the self-help group. So let's see that what are self-help groups. So why poor households are still dependent on the informal sources of credit? Let's have a look on this. Then we will have a look of the self-help groups. So the first point is what? Lack of banks, means that banks are not present. Banks are not present in the rural areas, because the urban areas are all having the banks, but in the rural areas the banks are not present. They are not present to give the sources of credit or to give the credit. So that is the first thing, that the poor household, that is why the poor households are dependent on the informal sources of credit, because there are the lack of banks in the rural areas. Even when they present, getting a loan from a bank is much more difficult than taking a loan from informal sources. Now the next thing, the next point is saying that if we are having bank, but then still also there is a difficulty. Why there is a difficulty? Because of the collateral. Because in the rural areas mainly the farmers needed the loan, but they doesn't have a collateral, and if they have a collateral they have been caught into debt trap, as we have seen in the Swapna's case. So we can see here that there is a much difficulty because there are terms of credit and the terms of credit cannot be completed or cannot be satisfied by the farmers for the banks. So there is a much difficulty for taking loan from the banks. So instead of taking loans from the banks, the farmers have to take, or the people from the rural areas have to take the loans from the informal sources. So as we have seen the thing that why the poor households are dependent on informal sources. So the absence of collateral is the one major reason which prevents the poor from the getting bank loans, as we have seen in the earlier point. And the loans from informal source sectors are easy because they doesn't need collateral, or they have a collateral. When they need also collateral, the terms of credit are not that much strict, so that they can easily get the informal sectors of credit. So the part of informal sector of credit, that is what SHG. SHG means self-help group. So a self-help group is about a 15 to 20% member group, you can say, belongingly to a neighborhood, and saving per member varies from rupees 25 to 100 rupees. So you can say here that one person, if there is one person, he has to save about 25 to 100 rupees, means in between he can save, a person can save about 25 to 100 rupees in the self-help group, and depending on the ability of the people to save, members can take small loans from the group itself to meet their loans. So here you can see that small loans can be taken from the group without asking them to have the collateral, or without asking them to have the SH, or you can say terms of credit. So the members can take small loans as they want and when they want. So let's have the more points on SHD. And if the group has regular savings, it becomes eligible from the bank loans. So as the bank looks upon the SHD, banks have a look on SHD, that whether they are having a regular saving, means are they having a regular saving, so that if the bank gives them loan, so they can repay that loan. So the loan is sanctioned in the group's name, that whatever the SHG's name it is, the loan is sanctioned on that name only, and creates a self-employment opportunities for the members. Now the most important decisions that are taken for the savings or the loan activities are taken by the group members only that are present in that group. So the group which is responsible for the repayment of the loan. So the group which has taken the loan is only responsible for the repayment of the loan, not for all the farmers that are present in that village is responsible. Only that group is responsible for the repayment of the loan which has taken the loan. Non-repayment of loan by any one member seriously dealt with other group members. It means that if one person or one member of that group has taken loan, and if he is unable to pay that loan, so all the members present in that group have to suffer for repaying the loan. So the person who is not able or unable to pay the loan at the time of repayment, so all the members that are present in that group who has taken the loan have to suffer for the repaying of that loan. So SHGs have helped borrowers overcome the problem at the time of lack of collateral, get timely loans at reasonable rates. So SHGs also help the people to take the loans at time. And the second thing is what, when they don't have the collateral, the SHGs help them while giving them the loan. So now you can say SHGs are the building blocks of organization of rural people or rural poor people. So if not only the SHGs not only help women become financially self-reliant, but also provide a platform to discuss, act on a variety of social issues such as nutrition, domestic violence, health. So SHGs also provide a platform to discuss some social issues that are going on at that village or at that time, such as health issues or such as domestic violence. So it also provides such a social platform to discuss that topics. So let's have the last topic of today's class, that is what, a Grameen Bank of Bangladesh. This is an example of SHG. You can say this is the one of the biggest success stories of Bangladesh or the Grameen Bank. So this is the story of Grameen Bank, that it was started in 1970. This is the biggest achievement story in the Grameen Bank. You can see that because the Grameen Bank have reached the poor people to meet their credit needs at a reasonable rate, and it started in 1970s. It was a small project, and in the 2014 it was about 8 million people, or you can say 8.63 people exact members, and there were about 82,000 villages spread all over the Bangladesh, and most of the person were women. So the Grameen Bank of Bangladesh has set an example, or has proved that not only the rich women or the poor women are reliable borrowers, but they can also start and run a variety of small income generating activities successfully. So that sets an example for the women to have the quality of starting a business and also running that business. So this is said by Professor Muhammad Yunus, founder of Grameen Bank of Bangladesh, and he is also a recipient of 2006 Nobel Prize for Peace. He has said that if credit can be made able to the poor people on terms and conditions that are appropriate, reasonable, these millions of small people with their millions of small pursuits can add up to create the biggest development wonder. So this is a very beautiful saying by Professor Muhammad. So by this beautiful saying, let's end up today, and we will meet again with the next. So thank you so much for today. So the next session will be on the Rowlatt Act. It will be at 6 p.m. on 12th of Jan, that is today only at 6 p.m. So let's meet again at that session. So thank you so much for today, and please subscribe to EduDose, like, share and comment below. If you have any doubt, any query, I'll answer your question at 1 hour. So thank you so much.